Welcome to Iron Financial, the place where we forge stronger portfolios by cutting right through the market's noise and weakness. Today, we're putting Western Digital directly under the microscope. Look, this company's been on an absolute tear, a rocket ship that has every single investor talking. But our job here isn't to chase rockets, it's to inspect the engineering. We need to figure out, is this machine built of solid steel, or is it just fool's gold that's waiting to crumble under pressure? Let's kick things off with the number that has everyone buzzing.
Just look at this number. Let that sink in for a second. In the last 12 months, Western Digital stock is up over 323%. That's not a stock chart. That's a skyscraper piercing right through the clouds. It's a huge testament to incredible market momentum, and it's a signal of massive strength that you just cannot ignore. Now, when we see a move this vertical, it demands our full attention. This is the kind of performance that can define a portfolio for an entire year. But you have to know it also carries immense gravitational risk if the underlying structure just isn't sound.
Okay, but hold on a minute. A skyscraper is only as strong as its foundation, right? It's engineering. And a number that big, that fast, honestly, it makes me nervous. Every retail investor on the planet sees a chart like that and gets a serious case of FOMO, fear of missing out. But let's be real, chasing vertical charts is exactly how people get burned. So the question we have to answer today is brutally simple. Are we looking at a fortress of a company, a solid structure that's built to last for years to come, or is this just an elaborate house of cards built on pure hype and ready to collapse at the first sign of a strong economic wind?
And that's exactly what we're here to find out. We are going to conduct a full structural inspection of this company from the ground up. First, we're going to tackle that 300% question head on. Then, we'll drill down and inspect the bedrock, its revenue. After that, we'll test the load-bearing walls by analyzing its profitability. We're going to pop the hood and look at the AI growth engine that's supposedly powering this whole machine. Then we will run a full-on stress test on its cash, its capital, and the confidence of its management team. And finally, after all the evidence is in, we will deliver the Iron Financial verdict. Let's get to work.
All right, first things first, any strong position, any company that truly deserves a place in a forged portfolio, it has to be built on a bedrock of growing sales. Without a solid revenue foundation, everything else is totally irrelevant. Profits, cash flow, stock buybacks, they all start right here with the simple act of selling more stuff than you did the year before. So let's see if Western Digital's foundation is solid enough to support that skyscraper of a stock price, or if we find cracks right away. Okay, so the very first data point we're laying down is the headline number from their latest quarterly report, $3.02 billion in revenue. Now, in isolation, yeah, it's a big, impressive number. But in financial analysis, no number lives in a vacuum. It's almost meaningless on its own. The real story, the real measure of strength, well, that comes from the comparison. How does this actually stack up against where they were before? Is this structure getting bigger, or is it shrinking?
And boom, this chart illustrates the point perfectly. Last year, in the exact same quarter, they brought in $2.41 billion. This year, it's over $3 billion. That is a 25% jump year over year. That's not just growth, that is serious acceleration. This isn't just laying a foundation, this is like pouring a thick slab of reinforced concrete. It's a powerful statement that the demand for their products isn't just stable, it's surging. This is the very first test of structural integrity, and frankly, they've passed it with flying colors.
Okay, 25% growth is strong, I'll give you that. But was this expected? Did the market already know this was coming? If every single analyst on Wall Street saw this from a mile away, then the stock price already reflects it, and it doesn't really mean as much for the future, does it? That's a fair and critical question. And you know what? The answer adds another layer of steel to this foundation. The market, the collection of Wall Street analysts who do this for a living, they were expecting $2.92 billion. Western Digital didn't just meet that expectation, they walked right past it and delivered $3.02 billion. That's a $100 million beat. They didn't just pour the concrete, they exceeded the architectural specifications. That is a sign of true operational strength.
So the foundation is solid, that's clear. Revenue is accelerating and it's beating expectations. But a foundation alone doesn't make a skyscraper, right? You need strong, load-bearing walls. In the world of business, that means profitability. It's not just about how much you sell, it's about how much you keep from everything you sell. Any company can grow revenue by just cutting prices to the bone, but that's a weak structure. This is where we separate the high-volume, low-margin players from the true powerhouses. Let's check the integrity of Western Digital's core structure.
The first number we're looking at here is non-GAAP gross margin, and the growth is just explosive. Think of it this way.
Last year, for every dollar of product they sold, they kept about 38 cents after the cost of actually making that product. This year, that number has jumped all the way to 46 cents. This is a massive expansion. It means the company is gaining pricing power, becoming more efficient, or maybe even both. They are making significantly more money on every single thing that leaves their factories. That is a sign of a very, very healthy business.
Okay, you're throwing around terms like BPS. For the people trying to forge their own portfolios at home, what does 770 basis points actually mean in plain English? It means a 7.7 percentage point increase. Look, in the world of manufacturing and technology, where margins are often fought for tooth and nail, a jump like that in a single year is huge. It's like discovering your entire building was framed with wood and then replacing it all with structural steel overnight. It signals a fundamental improvement in the profitability and strength of the core business. It's a massive leap in structural integrity.
And this right here is where that margin expansion hits the bottom line, where it really counts. Let's look at the earnings power. Non-GAAP earnings per share, or EPS, went from $1.20 last year to $2.13 this year. That is an incredible 78% increase year over year. And just like we saw with revenue, they didn't just meet expectations. The street was looking for $1.91, Western Digital delivered $2.13. So what we have here is a strong revenue foundation supporting powerful, expanding profitability that is just crushing expectations. This structure is looking formidable.
I see the numbers, I do. The revenue is there, the profitability is there, they're undeniably strong. But why? I mean, a building can look strong today, but if it's built in the middle of a declining neighborhood, its value is going to plummet. What is the economic engine that is driving all this growth? Is this just some temporary surge from a one-time event, or is this company plugged into a powerful long-term trend? We need to look under the hood and see what's actually powering this machine.
An excellent question. And you're right, this isn't happening in a vacuum. And this slide tells you everything you need to know about the engine. Just look at where the revenue is coming from. 89%, almost 90 cents of every single dollar of revenue came from cloud customers. We're talking about the hyperscalers, the absolute giants of tech that are building out the massive data centers that power the cloud, and more importantly, the entire AI revolution. Western Digital isn't just a hardware company anymore. It's become a critical supplier for the biggest technological shift of our generation.
And they're not just selling generic parts off the shelf. They are providing the specialized high-performance equipment these giants are demanding. They shipped over 3.5 million of their latest high-capacity ePMR drives. These are essential for storing the massive datasets that AI models train on. Their Ultra SMR technology, which ingeniously squeezes more data onto each disk to maximize storage density, that now makes up more than half their product mix. And their next-generation HAMR technology, which literally uses lasers to increase capacity even further, is already being qualified by major customers, and get this, ahead of schedule. This isn't luck. This is the result of solid engineering meeting an absolutely insatiable demand for data storage created by AI. And hey, you don't have to take my word for it. Just listen to their CEO, Irving Tan. He said their strong performance reflects their disciplined execution to meet demand in the AI-driven data economy. It's right there in black and white. The company's entire strategy, their execution, their results, it's all explicitly and successfully built around servicing the AI megatrend. This isn't some temporary engine that's going to run out of gas. This is a nuclear reactor that's just getting warmed up.
Okay, I'll admit, the story is compelling. The AI angle is powerful, but I've seen plenty of companies with great stories and great-looking profits on paper that just turn out to be smoke and mirrors. Are these real profits? Can they be converted to actual spendable cash? Before I sign off on any structure, I want to run a stress test. Let's look at the cash flow, because cash is the ultimate reality check. You can't fake cash. Let's see if this structure is truly sound when we apply some real pressure.
This is my favorite part of any analysis, the stress test. Because you're absolutely right, cash doesn't lie. In the second quarter alone, Western Digital generated $653 million in free cash flow. This is the cash that's left over after running the entire business and investing in its future growth. This is not some accounting entry or a paper profit. It's the cold, hard steel of the operation. It proves the earnings are real, they are tangible, and they are flowing directly into the company's treasury. The stress test shows zero cracks.
So they're flush with cash. So what? What are they doing with it? Is it just sitting in a bank account collecting dust? What a management team does with its cash tells you everything you need to know about their confidence in the future. And let me tell you, Western Digital's management is screaming confidence from the rooftops. They generated $653 million in free cash flow. They then turned around and spent $615 million of it buying back their own stock.
which reduces the number of shares and increases the value for existing shareholders. On top of that, they paid out another $48 million in dividends. They returned more than 100% of their free cash flow directly to shareholders. That is an act of extreme confidence in their business outlook.
And that confidence extends directly into their forecast for the future. For the next quarter, Q3, analysts were looking for revenue of about $2.98 billion and earnings of $1.99. Now look at what the company itself guided for. Revenue between $3.1 and $3.3 billion and earnings between $2.15 and $2.45 per share. At every single metric, their own forecast for the future is significantly higher than what Wall Street was expecting. They're not just resting on their laurels, they are telling the market they plan to build this structure even higher and even stronger next quarter.
All right, we've inspected the foundation, we've tested the core's load-bearing walls, we've examined the engine, and we've run the stress test. We have all the evidence right here in front of us. Now it's time to bring it all together and deliver the final no-nonsense verdict. Based on this deep dive, is Western Digital a generational opportunity powered by AI, or is it a dangerous trap for unwary investors who are just chasing a hot stock?
The bull case, the argument for Solid Steel, is frankly overwhelming. They are crushing revenue and EPS estimates. They're showing massive structural margin expansion. The entire business is being powered by the AI megatrend, which, let's be honest, is still in its early innings. They are gushing free cash flow and returning it aggressively to shareholders, and they've issued confident forward guidance that blew past analysts' expectations. The evidence points to a structure made of solid steel, but we absolutely must acknowledge the potential cracks. After a 323% run, you have to ask if it's sustainable. Can they possibly keep up this pace of growth? The entire tech sector is vulnerable to a broad market downturn. And is the valuation, after such a huge run-up, simply too rich right now? Those are the risks any prudent investor has to weigh. But based on our inspection, the iron financial verdict is clear. The structural integrity here is sound. The foundation is solid, the core is reinforced, and the engine is best in class. The big takeaway is this. This isn't just random growth. It's disciplined, it's profitable, and it's powered by the single biggest trend in technology today. The evidence we've reviewed suggests this is a company forged in strength.
So, we've laid out the facts, we've conducted the stress test. Western Digital's framework appears solid, built to withstand pressure, and capitalized on a powerful trend. But our mission here is to give you the tools to forge your own stronger portfolio. The final decision, as always, rests with you, the investor. So the question you need to answer is this. Is this company's solid framework the right cornerstone for your portfolio?